What's up, fellow Harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into the exciting world of harmonic technical analysis, as well as gearing up for a significant market event next week with the release of the ISM Services PMI data. For those of you who are not familiar with what that is, ISM stands for the Institute of Supply Management, which is a non-manufacturing purchasing managers index that reports on business and is calculated as an indicator of the overall economic condition for the non-manufacturing sector. So this index tracks business activity, new orders, employment, and supplier deliveries. A reading above 50% can indicate that the non-manufacturing sector of the economy is generally expanding, while a print below 50% can indicate that the non-manufacturing sector is generally contracting. I also want to mention that a higher than expected reading could potentially be seen as a positive sign for the USD, while a lower than expected reading could be taken as a bearish sign for the USD. We also have continuations into earnings next week with more blue chips and mid-cap stocks reporting, especially after last week we had a crazy week with Meta and Amazon reporting good earnings, so it's going to be interesting to see if there's going to be more continuation to the upside in the market. So make sure you hit that like button, subscribe if you haven't already done so. Before we get into the charts, I want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into the charts. So jumping over to the SPY here, so the S&P had a very crazy week, especially with a lot of these blue chips. Specifically, I'm looking at Meta, which had very good earnings, which continue to push the market higher, and SPY created new all-time highs and closed the day for Friday at 494.35. So what can we expect here harmonically for the S&P? We do have a bearish shark pattern on the daily, which is already past the 30-bar rule, which can mean that something else may be taking place on the bigger macro timeframes. And I want to jump over to the 3-day for that, because we do have a bearish bat pattern, and we know that the bearish bat pattern, the extension of this leg D here, can go to the 2618. So that's where the hop could be at 498.57. So if I bring up my drawings here, so the next level of resistance, should there could be resistance here, would be that 498.57 at hop, maybe that psychological level at 500 between that range. If you find some resistance there, the next level I'd be looking as to fill a couple gap fills. They're very tiny here, but it's around 489 and then another one around 482. Lose that level and maybe you can come back down to 480. 480 would potentially start the type 1 reaction all the way to target 1. So you have terminal bar at 473, XA at 465, and then to complete the type 1 reaction is calling at 428.10. So that's a little bit far out to see if that's going to happen. If the market continues to push even higher above 500, the next level I'd be looking at would be 515.85. Why 515.85? Because if you take the previous highs that tested back in January 22 by taking a fib retracement tool to the swing low of October, the 127% retracement is 515.85. Above that, then you obviously continue to push higher, but I do want to mention that on the weekly, we do have an increase in volume from the past 3 weeks. So the market, just by looking at this, wants to continue potentially pushing even higher. The RSI is a bit overextended, but the HSI is signaling that it could be more upside as well. So it's going to be interesting to see if SPY continues to push, but definitely keep an eye out on the S&P. Jumping over to the triple Qs here, so I'm going to be talking a lot about the 3-day charts here, because a lot of the harmonic patterns that had formed on the daily have already surpassed the 30-bar rule. So that what that could mean potentially is that a longer harmonic pattern on a more macro time frame could be taking place. And just like the SPY here, the triple Qs also has a bearish harmonic on the 3-day. The Qs has a bearish shark pattern. So what can we expect here for the triple Qs as I bring on my drawings? So on Friday, it did create a new all-time high, close at 429.01, which closed above the 1.13 of the shark pattern above OB here at 428.79. So what can we expect if there's more continuation to the upside? The next level I would be looking at would be hop there at 450.72. Should you find some resistance here, the next level I would be looking back, rejection of an OB would be all the way down to 408.71. And then terminal bar at 393.07. You do have few gap fills all the way at 378, which could start the type 1 reaction all the way to target 1 at 342.06. So obviously this is on a 3-day chart, which could take some time. I want to jump over to the weekly here, which also has a sharp pattern. This is actually calling a much lower number at hop, which is at 445.47. OB here is at 424.12. So right now this is a increase in volume on the weekly with a hammer candle to the upside. So this could just mean that there is more continuation to the upside. Should this actually be a reversal candles. Next level if you need to lose would be OB here. Maybe you come back down to 408.71. Right now there is a bearish divergence on the weekly still, which could be invalidated if you come back to potentially the 76 level here. So if it's continuation, then the market is going to continue pushing even higher, maybe invalidating that bearish divergence. If this bearish divergence starts taking place, maybe you can start seeing the type 1 reaction back down. The HSI kind of curling upwards could indicate that there's more upside before there is more downside, or any downside. The AMP RSI is also suggesting that it can go still to these extreme levels. So the Qs here on the daily also had an increase in volume, so it's going to be interesting to see if there's going to be more continuation into next week with all these other companies reporting earnings. So definitely keep an eye out on the triple Qs. Jumping over to the Dow Jones here, so the Dow Jones continues to make higher highs here. Closed on Friday at 386.42, which was a new all-time high for the Dow. So what can we expect here for the Dow? You do have this bearish shark pattern, and you're clearly above Hopper at 381.10. You're also completely overbought on the weekly. The HSI did cross this level here at 88, but it can see if it can come back to that double top around that 110 range, which could potentially push this even higher. I haven't taken a fib retracement tool just yet to see where that could be. If we could take this from the previous all-time highs at the highs here back in January, take a fib retracement tool here to the 52-week lows of October. The next level I'd be looking at would be the 127% retracement at 392.04. Above that you have the 1618 at 420.72. So the next level, should you find some resistance in this area here, jump over to the 3-day. You look to see if you can come down to hop here at 361.10. Below that you have 378.25. Losing that level, and I do think you can come back down to 371 and then 369 to maybe start the type 1 reaction. Type 1 reaction would complete it all the way at target 1 at 322.44. This is obviously on the 3-day chart, so it's going to be taking a longer time to do that, if it's going to do that. Otherwise, there's more continuation to push that to that maybe psychological level at 400 for the Dow. If we jump over to the weekly for the Dow has been actually pretty crazy here, and the volume did decrease slightly. So the weekly, like I said, the RSI is a bit overextended, but you could still maybe push towards that $400 range if that's going to be more continuation. So definitely keep an eye to see if the Dow continues to push even higher. Jumping over to IWM here. So IWM here does currently have a bearish crab pattern. On Friday it closed at 194.41. So what can we expect here for the Russell 2000? Right now I'm looking at the level it is currently in between that 195 and 191, which is between the 90 EMA and the 50 EMA that it's sandwiched in between here. The volume started to decrease on Thursday and Friday, so if there is going to be more continuation to the upside, you do need to reclaim here the 90 EMA, where it's finding some resistance here. Found resistance on Thursday and Friday, which is around 195. So if you're able to close above that, the next level I'd be looking at would be here at this top here around 199 to 200, and you definitely want to close above XA at 201.15, which could potentially push even higher to that hop level at 211.69 for that type 2 return to hop. Should you find some resistance here and fail the 50 EMA here on 191, the next level I'd be looking at would be target 1 here of the crab pattern to complete the type 1 reaction at 188.670. You could argue here backward it tested XA and they had that false breakout to the upside. You came down, not really, I mean, it's up to interpretation, but it came down here for that type 1 reaction. It's not exactly to the penny, but it could come back down this time around. So what's interesting here to see, maybe a W formation could potentially start forming for a double bottom, and you could push even higher before you come back down for another bearish pattern, right? Because we know a W formation is a bearish pattern. So what can we expect here if we're looking at the HSI? The HSI crossed the midline on Friday, so the volume is decreasing, which could suggest that potential volume is drying up on the to the upside. Should the volume come back up to the upside, you definitely want to have an increase in volume to signify that it's going to push higher to that $200 psychological level. If we go over to the weekly here, the weekly was a doji candle with high volume, so kind of an indecision place here. You're still in this range. The IWM has been tracking all the way since August. 1, 2, 3, maybe a quadruple top here, who knows, but it's definitely in this one of the longest ranges I have ever seen. So definitely keep an eye out on IWM. Jumping over to XLF, the financial sector. So we currently do have a bearish butterfly on the daily. But what can we expect here for the financial sector? You're definitely getting more volume here to the upside, and you did close above XA here. XA was at 38.92. You closed on Friday at 38.98. So volume did start to pick up again. So what can we expect to the upside? Next level of resistance would be a hop here at 39.93, and maybe that psychological level at $40. So if you do find some resistance here above XA, the next level to the downside would be 38.33, 37.20, and then maybe you come down to complete that type 1 reaction at target 1 at 35.99. If we look over here to the RSI is underneath that 70 range here, so we can definitely push even higher like it has back in the past here, and that would create a potential higher high and test that potential target there at hop. Should you come back down here to test and lose a 21, you definitely want to see that come down with high volume, because the last time it tested the 21 here was mid-January. It found support, increased in volume, and continued to push it higher. Before that, you obviously had been just riding above the 13 EMA and finding support there. So you definitely want to see it lose a 21 EMA with volume to signify that a potential type 1 reaction could be starting. Right now on the daily, you have the HSI could be find support here above the midline, which could find support here above XA, which could potentially take it to that hop level. So if we go over to the weekly here, the weekly also past 2 weeks here has been on an increase in volume, which could signify strength and continuation to the upside to maybe even reach the all-time high levels there, which was around 41.70. Right now, even after the whole debacle there with NYCB pushing the regional banks lower, you did start to climb even higher during the end of the week. So definitely keep an eye out on the financial sector. Jumping over to XLE here, the energy sector did report some earnings on Friday. Some were missed, some were beat. But what can we expect here off the bullish Gartley for XLE? Right now, you do have a bit of resistance here at the 200 EMA. You had super high volume here with an HSI arrow, and then you had high volume here, which came down all the way to that 82.51, which is a level of support that I had. You found support and are just barely closing above the 90 EMA here. So what can we expect here to the upside on the energy sector? Next level, you definitely need to break above to see if it's going to come back up for that type 2. Type 1 reaction to target 2 would definitely be a break above 84.59, reclaim target 1 at 85.88, and then maybe you could see target 2 at 88.86. If you do find some resistance here and get the volume to the downside and break below 82.51, the next level would be looking would be XA at 81.74. Maybe you have this double bottom here at 79.07, and then finally to complete the type 2 return to hop at 77.79. The HSI right now is approaching that midline, so I do think this is going to be a very key level here for XLE. Right now, you could argue that maybe this is forming a potential inverse head and shoulders. You have the left shoulder here. This is the head, and this is potentially the right shoulder forming, and you could argue that this would be the neckline around target 1 to see if that breaks above. If it fails that, then I do think you will start a lower low here. If we go to the weekly here, the weekly does have this bearish crab pattern. And at my level here at 82.51, this is, I think, a potential make or break situation for XLE. If you fail this level here, I do think you will approach here down the line to that 200 EMA here around 73.30, where there is a gap, and maybe complete the type 1 reaction at target 1 at 67.27. The volume on the weekly did increase to the sell side this last week, and is currently trying to see if it's going to get rejected at the HSI midline. If it gets rejected, and I do think we start that lower low. Otherwise, if it does get above and you get some volume to the upside, then maybe you can see for another lower high here. So definitely keep an eye out on the energy sector. Jumping over to Apple here. So Apple did have earnings this week. It did come a little low here all the way to the 200 EMA here, all the way to 179.25. But it did manage to close the day on Friday at 185.85, which is a close above target 1 at 182.65. So what can we expect here to the upside if there's going to be continuation in volume? The next level I would like Apple to reclaim would be 190, which would be where the 50 SMA is at. Obviously, a break above terminal bar here would kind of be bullish, as the last time you did try to stay above the terminal bar, you failed twice. So you definitely want to claim 194.40 here. So maybe you could see that type 2 return to OB at 201.30, which would be a new all-time high, and then hop at 205.78. Should you find resistance here and you get volume again to get rejected around the 21 or the 50 SMA here. The next level I'd be looking at would be 182.65. The 200 EMA again at 180, and then maybe you come back to complete the full type 1 reaction at target 2 at 169.54. If we go over to the weekly, I want to see that there's a contradictory pattern here. We have a bearish dragon pattern, which is on high volume here. You close just slightly below the 21 EMA, but did manage to absorb some of that from the 50 SMA and EMA here. So the dragon pattern here is at a key level here. There's no entry point here from this dragon pattern to the downside just yet. But if there is going to be continuation to the downside off of this, you could argue this is a hanging man. The next level I'd be looking to complete the type 1 reaction off the dragon pattern would be 156.44. Obviously this is on the weekly chart, which would take some time. If that does not happen, it's not the case, the next level I'd be looking at would be that 194.52. So there is some confluence there on the daily. The dragon pattern is also saying that that is a key resistance level. So if you're able to break above 194.52, you can come back to the type 2, return to OPR at 207.09. So definitely keep an eye out on Apple. Jumping over to Microsoft here. So Microsoft did report earnings last week, which beat both on EPS and revenue year over year. So what can we expect here off of this bearish ABCD pattern for Microsoft? So on Friday, you did close at 411.22, which was above ABCD here at 406.71. So the next level to the upside I'd be looking for Microsoft is a hop at 419.35 to 420. If you do fail ABCD here at 406.71, the next level I'd be looking at would be the 21 EMA here at 396, come down to the 50 SMA EMA, which is around 381, 382. As you could tell here, the last time I tested the 50 EMA and SMA here, you found support and created a higher high. So if you do fail this level here around 382, you may be starting down a type 1 reaction here to complete a type 1 reaction on target 1 at 354.49. Right now, you are approaching these overbought conditions again on the RSI. So it's going to be interesting to see if Microsoft has more continuation to the upside here. The weekly, you are a bit overextended here. So this could be a reversal sign coming in soon. Otherwise, if there's no reversal sign just yet, the volume continues to increase here on the weekly, which just could mean more continuation to the upside here. So definitely keep an eye out on Microsoft. Jumping over to Amazon here. So Amazon also reported earnings this week, and it did pretty well. It did beat both on EPS and revenue, and it did gap up on Friday, which closed the day at 171.81. So what can we expect here for Amazon? You currently do have this bearish ABCD pattern, but the volume obviously going to be higher when you do release earnings. So what can we expect to the upside on Amazon? The next level I do have is 188.65, which was the previous test of the highs there back in July 2021. So that's the level I'd be looking at, so there'd be more continuation to the upside. You do have this bearish bat pattern. Obviously you broke with some strength here, an increase in volume above hop, so there's still strength even though the RSI is a bit overextended. You did have this bearish divergence, which is obviously invalidated by getting above this level here. So this just shows more strength potentially here for Amazon, and I'd be looking at 188.65 and then maybe testing a new all-time high. You did find support above the HSI midline, so before it even goes into that overbought condition, that could be way past the previous all-time highs and maybe push towards that psychological level at the $200 mark. So if there is a bit of resistance around these levels here, the next level I'd be looking at for Amazon to the downside would be to come back down to hop at 166.25. Maybe you fill that gap there at 159.76, and you complete the type 1 reaction to target 1 at 153.25. Below that, you can go to 148. So the last time Amazon did come down here was test the 50 SMA and EMA, and you created a higher high. So we'll definitely have to keep an eye on Amazon if there is going to be some resistance here, or it's just going to continue pushing even higher. So definitely keep an eye out on Amazon. Jumping over to Tesla here. So Tesla on the daily is finding some decrease in volume compared to the last week's volume, right? It did try to match up some volume here, decreased here, and then on Friday it started to pick up some volume, still holding above the terminal bar here off of this bullish Gartley pattern. Closed the day at 187.91 on Friday. So what can you expect here? You did get a HSI arrow to the upside. We found resistance at XA at 183.25, and right now to me it looks like you're sandwiching between that XA and terminal bar. So to the downside, if you are able to lose the terminal bar here at 180.06, the next level I'd be looking at would be 174. 44 below that. You complete the type 2 return to hop at 158.14. Should you reclaim XA here at 193.23, which is right where the 90 MA is at right now, and maybe you can come back up all the way to the 21 to fill that gap at around 207. Above that, then you have 223.79. In order, in my opinion, for Tesla to be bullish, I think you need to come all the way up to that 223, reclaim the type 1 reaction here at target 1 at 225.61, and you do have a gap fill around 230 there. Above that, then you can see target 2 at 253.74. So right now, it's kind of interesting to see where Tesla is going to go. You're still completely oversold on the daily here on the RSI. The HSI, what's interesting here about the HSI is starting to look like maybe it's going to that overbought condition. That overbought condition could take it just towards that 193.23 level where XA is at, maybe the entrance of the gap, which could then start printing an HSI arrow to the downside, as they're saying, indicating that a reversal is coming back down. So you could come back for a lower low. That's still too early to say. You definitely will have to see if this is actually going to also curl back down to test that midline. Curl back down to the test that midline could be at that terminal bar at 180.06. So it's pretty close here for Tesla. If we go over to the weekly, you do have this bullish Gartley on the weekly at the completion of point D. You generated that pattern, and right now you're still just hovering above XA here at 183.81. It was on lower volume here, and that is an inverted hammer candle, which is a reversal candle. Right now the HSI on the weekly is completely oversold, so what you're looking here for a potential reversal here on Tesla would be to generate that HSI arrow off of high volume, or at least next week to continue pushing with higher volume to indicate that volume is going to come into the buy side, maybe to reclaim the 200 EMA here, which is at $200, and like I said, there is a gap there around 207. So definitely keep an eye out on Tesla. So jumping over to Google here, so Google also reported earnings this week. It does have this bearish deep crab pattern on the daily. At the completion of point D here, you did manage to close above hop here. Just the day before earnings, you did have an HSI arrow to the downside right before the earnings came out, and you came all the way down to complete the type 1 reaction to target 1 at 140.56, where you did gap down. On Friday, you actually dropped even lower here, almost to hit target 2. You went as low as 136.50 before managing to close above target 1 and close the day on Friday at 142.38. So what can we expect here for Google to the upside? The HSI signaling that it's potentially oversold. I want to see an HSI arrow on the daily to signify that a reversal is incoming. Maybe you reclaim the 21 EMA, which is around 144.31. Get above XA here at 146.54. Finish that gap there around 151.52 where hop is at. Above that, then you obviously will be pushing for a new all-time high. If we go over to the weekly here, the weekly does have this bearish bat pattern, and we can see that 2 times in a row hop has been resistance for Google. So in order for this to push even for a new all-time high here, to close above the all-time high, you definitely want to reclaim hop at 152.32. So definitely keep an eye out on Google. Jumping over to Meta here, so Meta, very bullish week, obviously with reporting good earnings here. It did push as high as 20% for the day on Friday, which has pushed it all the way up to 485.96 before closing the day at 474.99. So what can we expect here for Meta? I really don't have any levels here because you do have, you're basically at an uncharted territory here as it continued to push even higher on the weekly, and I believe even on the monthly RSI you're so overextended. So only thing I could draw here for Meta, if there's more continuation, would be that 567.41, which is, I know sounds crazy here, but maybe there is a psychological level around the $500 mark. The reason why I have 567.41, I drew a fib retracement here from the previous highs here, which was at 384.33, to the October lows, which was at 88.09. I honestly thought that you would probably hit some resistance here on Friday at 464.91, but you were able to close it above higher than that. So the next level I have is a 1618, which is crazy, at 567.41. So that's the next level I have for this thing to continue pushing higher if it decides to push even higher. Otherwise, I do find some resistance here. Then you could see maybe you come back down to maybe $400 range, maybe that 384.33 range, but right now it's kind of hard to see. There's nothing harmonically that's telling me that there is a downside yet. So you did generate a big gap here, so that gap starts to get filled at $400.50. So it's a little bit too early to see where this is gonna where Meta is going to retrace down to, if it's going to retrace down to. Otherwise, I do see just continuation to the upside here for Meta. So that's all I pretty much have for Meta, so definitely keep an eye on that one. Jumping over to NVDA here. So NVIDIA continues to push even higher and creating new all-time highs slightly before earnings here. But earnings is on February the 21st here, so there could be more continuation to the upside. So what are those levels to the upside? The next level I have drawn here was 681.22. A break above this, then you have that psychological level at $700, and then I do have another level around $732.10. So these are all just fib retracements and fib extensions. So definitely going to see if there's going to be more continuation. If there is some resistance there at 681.22, the next level I'd be looking at here. There is no current harmonic on any time frames that I have for NVIDIA here. But the next level, should you get rejected around this area here, around 660 or 681, is to come back down to fill that gap around 632, maybe test a 90 EMA around 623, and then all the way down to 589. We do have this bearish dragon pattern here on the daily, but this is invalidated as they continue to push way higher. So I don't have anything on the macro time frames that indicating a reversal is incoming just yet. Is thinking continue pushing even higher just before earnings. So definitely keep an eye out on NVIDIA. Jumping over to Netflix here. So Netflix on the 3-day currently has a bearish bat pattern as well as this bearish dragon pattern. So I'm going to be looking more so on the bat pattern here, where you are having a bit of resistance here at XA here at 568.41. So what can we expect here harmonically to the upside? HSI did cross the midline. If it reaches these overbought conditions, you definitely want to reclaim XA here above XA 568.41, and maybe you could see a hop at 685.17 down the line. Resistance at this level here, it could indicate that you're potentially coming back down to that 508 range here, where you do have a gap there all the way down to 501.23. You come and test BC here of the dragon pattern at 475.10, and then you start your descent down to the type 1 reaction target 1 at 420.37. So we jump over here to the weekly here on Netflix. You can see here from this previous ABCD pattern, you reclaim target 1 at 555.63, and then it's calling for 630.74 if there is more continuation. Obviously on the weekly volume was high volume, so a push up here is supported for more upside. Otherwise you can come back down, maybe retrace, or maybe even consolidate waiting for the next leg up or next leg down. So the HSI on the weekly finding support above the HSI midline, which could indicate potential upside is still incoming here for Netflix. Otherwise you come back down maybe all the way down to that 511 range here, where you did gap up because of earnings. So volume is starting to decrease here. If we look here on the RSI for the daily, you're still above the oversold conditions here, above 70, but you are approaching below that here. So maybe you start to consolidate up here. Maybe you retest 552 to the downside here. If you're able to lose that, then maybe you see that gap fill down the line at 502. So the HSI is approaching that midline, so I do think this is a make or break situation here for Netflix, whether you're harmonically you're going to find support there and continue pushing higher till that type 2 returns on the bearish patterns, or you come back to the type 1 reaction crossing that HSI midline. You can see the type 1 reaction to those target ones, so definitely keep an eye out on Netflix. Jumping over to Bitcoin here. So Bitcoin on the 2-day currently has this bearish T-crab, where I do think you're in a potential consolidation phase, and that could be evident by just the indecision candles you're having right at XA. So I do believe you're gearing up for the next leg up or the next leg down, depending on where the volume comes in, right? So to the downside, the next level I'd be looking at for you to lose this level would be the 21 EMA here at 42.3. Below that, you can come down anywhere between the 50 SMA and EMA, which is around 40,000, and then maybe you see the double bottom here around 38.5. Below that, then you're obviously starting the type 1 reaction all the way to 33.5. To the upside, if you're able to reclaim here XA, you definitely want to have some volume push up all the way to terminal bar at 44.4, and then maybe you could see 50k down the line to test that hop level for that type 2 return. If we go over to the weekly here, obviously we had this high volume weekly candle here with that HSI dot. You came all the way down below the 13 EMA, and you had some absorption with that hammer candle here, but right now the volume is starting to decrease to the upside here. So that is just evident to me that there is a consolidation phase happening right now, and we can clearly see that more on the daily here. From the sell-off here, you kind of had some stagnant lower volume here, and you could argue that you're in a bear flag here. Usually when you're in a bearish formation or a bullish formation or any pattern formation, when you're trying to see if it's going to break up to the upside or to the downside, the volume tends to contract and decrease, waiting for that volume to come in to potentially play out that formation. So if this is going to be a bearish formation, a bearish flag formation, you definitely want to see the volume to pick up to the downside, and that could be anywhere below 42K. If you lose that level, maybe you see, like I said, 38.5, and then test the 200 EMA here at 36,000. So definitely keep out on Bitcoin. That's all I have for you guys. I will be streaming same time as always, so if you want to catch me streaming, the link to my Twitch is in the description box below. I hope you guys have a good rest of your Sunday, and I will see you guys tomorrow. Take care, everybody, and peace.